What we think is actually going to happen is by the end of this year, interest rates will probably be like a 1-year fix, like 6.1, do you think?
Yep.
And then by the end of next year, by the end of 2025,
Great.
What do you think?
This is going to be my
I would
question.
say low 5s, high 4s.
That quickly.
Yeah.
That's where we started.
Yeah, but I think
That's where this whole storm of
but
shit started.
that is a
average.
long-term average interest rate for Kiwis, and your debt-to-income ratio means that probably holds true. Yeah.
Welcome to Cheques and Balances. My name is Reagan White, guest host of this week's episode brought to you by Partners Life. The topic for this week, why 2025 is going to be better than 2024. Mike and James, we're in a shitload of misery right now. Why is next year going to be better than this year?
I'm in a ton of misery because it was so much better than my intros.
Oh, yeah. And you did it the first time.
I know.
What do you reckon?
Are you suggesting that I don't nail them the first
You know
time?
how you have
James?
like rugby players with their stats? What do you reckon you're rolling at in terms of average tries and intro before you nail it? Like 3.2?
I don't speak in stats. I speak in facts.
I'm running 100%. Just
Yeah. I'm 1-0.
Yeah.
All
You want to
right?
do a second episode? You would have retired now.
Yeah.
I'm done.
So I think the first thing we should do is we should talk about where we are at the moment. It is a very weird place we are at the moment. So like essentially Mike and I are excited because we've hit the point that everybody is so miserable that it has to get better.
Yeah.
Isn't that a weird place to be?
It is. And it's, I mean, I guess we're forward-looking people, right? So what's happening now or today is for us a little bit in the past. We're always looking like what's happening in 2 years, 5 years, 10 years and making decisions based on that. But the fact that everyone is so miserable right now that the Reserve Bank has gone from basically saying one thing to doing another very quickly is super exciting.
This is the hockey stick moment, right? We're
is.
at the bottom of the hockey stick and we're about to start the little the flick up, right?
And I don't think it's as steep. It's not going to be as steep. I don't think it's going to be an as steep a takeoff as
You're not going to be surprised in hindsight. In hindsight, if things go bananas next year,
bananas.
BANANAS, you're not going to be that surprised, are you? Because there are a hell of a lot of signs.
I would be surprised. I
Would
would be
you?
surprised if things went, not 2021 ballistic, but like 2019, 2020. I would be very surprised. The pain that people are feeling is not going to disappear over the next 12 months. It is going to hang around for a little bit longer.
So, but inflation and interest rates are very much tied
Same
together.
thing, yeah.
Because if you think about interest rates, it's just a tool to get people to spend more or less money. Interest rates are at 2%. You have lots of disposable money, gets the economy going.
on top of quantitative easing.
Well, you think about interest rates or the official cash rate as the accelerator on the economy.
Yeah.
Tax is the brake on the economy. And I guess your fiscal spending is probably the gear that you are in. Yeah.
Ooh, nice.
Well, it is like your tax. Like the government doesn't fund themselves out of tax. They either print money or there's money in the economy. There's not money in the economy. Like the tax is literally just a brake on the economy.
So 2025 is going to be vroom, vroom.
I want it
All
to
right,
be.
Mazda.
I thought it was a Toyota Camry. So coming back to inflation. Inflation was sitting at 7.2% in mid-2022.
Yep.
Very high for normal standards, right?
Extremely high.
Yeah.
And incredibly dangerous.
That is
If-
prices double every 10 years.
If you do not fix it, you can also start to move into hyperinflation. Mike, examples of hyperinflation?
Venezuela, South Africa,
Argentina. Argentina's inflation rate is like 70% over the past 12 months.
So you
What?
imagine the cost of
What?
everything increasing 70% per annum. And that's not even like the worst of hyperinflation. The worst of hyperinflation, the Deutschmark, then I think is World War One, and then Zimbabwe, where prices are rising like it's like thousands of percent per year.
Does a question from an idiot. With hyperinflation, does that hyper come back real quick?
No, it is much easier to dig an economy out of a recession than it is out of hyperinflation or high levels of inflation. To exit that scenario, you need to scrap whatever you've got or peg it to the US dollar, wait for the economy to stabilize, and then reintroduce a currency. That is far more devastating for an economy and for people's savings than it is to go, for the next 2 years, this is going to suck.
So we didn't want that.
No.
That would be really bad.
No.
Yep.
So the Reserve Bank decided, okay, we don't want that, which is the right thing to do. We're going to make everybody miserable.
Yep.
And that was the intention.
That is the right
And the reality is the intention was, and you were a consequence of this with your story as well, right? We want people to go into, this sounds crazy. We want people to really struggle to make their mortgage repayments. We want people to go into financial hardship. We want the unemployment number to go up because the consequences of not doing that, like Mike just alluded to, are so much more substantial. Yeah. So inflation was at 7.2%. The party stopped. And then we had to start, interest rates went up and we started to chip back away at inflation. Inflation kept growing. Everything got more expensive. The rate at which it got more expensive continued to drop though. So we're now seeing about 3.4%.
And it will be back down within the target band of 1% and 3%, probably by the end of the year, but definitely heading into 2025. So that's probably the first reason we think 2025 is going to be better than 2024.
Shout out to Adrian Orr.
Has he done a good job? Should he be fired up?
Should he be getting that bonus? Yeah.
Did he get that 5-year extension? Yeah, he did.
Did he print too much cash?
Absolutely. Cool. Second reason?
Interest rates?
We've
got to go to interest rates,
right? Yeah. So we think that next year is going to be better than this year, 2025 than 2024 because of interest rates. Reagan, as someone who's been through what I would describe as interest rate hell,
you can call me an idiot. That's fine.
Why do you think, if you're commentating on what we would say, why do you think it might be better?
Okay, so I've seen them go from 4.8 when I bought my first house to they started to get into the 5s. It got a little bit higher, but it was fine. Then all of a sudden, COVID hit. Money became cheap. Interest rates were sub 2%. Then they, across the course of like 2 years, they jumped to 7s, mid 7s, nearly 8s, and floating rates were like nearly 9s.
Yep.
In the last 2 weeks, there are now 5.99s available. That's a pretty, how fast, it took a while to get to the 7s. That's a pretty quick dip back down into the 5s. And I say 5s, 5.99 is actually 6. That's how the warehouse puts prices on things and makes you think you're spending less money.
Still terrible, man.
But that was a quick jump downwards. So that's why I think from an idiot's perspective, that momentum would continue downwards. Probably not at that pace.
I think it's actually going to get quicker.
Me too.
Yeah. So they have been trickling down over quite some time now. It's just that same thing in the media. You're never going to hear a good news story, front and center. The official cash rate dropping doesn't really impact these short-term rates too much. A floating rate will drop a little bit. But the sentiment for what that means for the economy is that we are always trying to guess, or I'm always trying to guess, where are we at the top of the cycle and when are we at the bottom of the cycle? Because right at the top, we're fixing super short. Right at the bottom, I'm trying to extend you as long as I can so you can hang on to these rates, right? So we kind of got the top guess right, and that's the next guess there. With the official cash rate dropping, firmly shows that the economy is past the top and it's going up while interest rates are going down. So that's basically why we think 2025 will be a much better year than 2024.
Before we move on, we talk all the time about planning and growing our wealth, but protecting that wealth is just as important. That's why having the right insurance in place can help when life goes unexpectedly.
And that's why this episode is brought to you by Partners Life, a New Zealand-operated, award-winning insurance provider with over 300,000 Kiwis insured and 89% of claims paid.
Partners Life understand that having some insurance is better than having no insurance. They have flexible and personalized solutions for any budget or situation.
Check out their website in our show notes below.
You said something else. You said you did mention the 5.99, which I don't know if you picked that up.
I did.
But this is a common thing that people are making a mistake with at the moment. So they're looking at the list of rates right now in terms of lending rates, and they're seeing interest rates for 6 months is maybe like 6.8. And then if they're going to those longer fixes,
like an 18-month minimum is like, that's where your 5.99s are.
Or even longer than that, right?
Yeah.
If we're kicking out, we're talking to people who, because they're trying to trick you at the moment. They're going, if you fix for 3 or 4 or 5 years, you can get a much lower interest rate. Why is that a bad idea, Mike?
I don't think it's the bank trying to trick people.
Oh, they're tricking you because they're greedy pigs.
Yeah,
I think it is.
It's like, it's just an inverted yield curve, which prior to like the cycle we've just been through, haven't seen for quite some time. But effectively, it is the bank going, I know if you fix on this rate, because a bank, all they're doing, and I don't want to get technical here, is matching maturity risk. You borrow long-term loans, they fund short-term. They know
It's not what's happening. They're
They-
stealing our money.
They know that they will be able to fund that loan on cheaper money in the future. So
Yeah.
they're happy to take a little bit of a hit now.
Reword that. That means they're going to make more money off me for longer while it costs them less.
AKA greedy pigs.
Yeah. So look, in terms of how banks, all businesses operate on a relatively similar thing.
Yeah.
But yeah, look, at the end of the day, if you are looking at those 5.99s and going, man, that looks attractive, my advice to you, and this is personalized financial advice, is go speak to a mortgage broker. Simple as that.
Yeah. But the big thing, right? So you go, I assume interest rates won't come down at the same pace. But once inflation is between 1% and 3%, and we're quite worried about what's going to happen, where in hindsight, we're going to look at it and go, ooh, this economy is not in good shape. Like when you talk to people, right, there's a lot of people that are miserable out there. Once inflation is back within the Reserve Bank's band, there's actually no reason to keep interest rates high because you are back within the band. And if you keep them high, or if you take your time to get back down to a certain number,
Unnecessary pain.
it's going to create more pain. So what we think is actually going to happen is by the end of this year, interest rates will probably be like a 1 year fix, like 6.1. Do you think?
Yep.
And then by the end of next year, by the end of 2025,
Great.
what do you think?
This is going to be my
I would
question.
say low 5s, high 4s.
That quickly.
Yeah.
That's where we started.
Yeah, but I think
That's where this whole storm of
But
shit started.
that is a
long-term average.
long-term average interest rate for Kiwis, and your debt to income ratio means that probably holds true. Yeah.
So that's like a 4.8.
4.9. I'll go 4.99.
Say 4.8.
1 year fix, end of 2025, 4.99.
And if that doesn't happen, what are you buying us?
I've
We'll pay
already
you
bought
mortgage.
it. We'll drink it. It's a bottle of Varley Pinot Noir, and it's bloody good. Yeah.
Deal.
Done.
Cool. And then so like there's other roll-on impacts to all of this as well. So we've spoken about inflation, we've spoken about interest rates. The next thing is consumer and business confidence.
Yeah.
So, business is very much tied towards interest rates. Why? Because so much of the New Zealand economy is tied towards housing.
Funded by housing.
So if you think about the business owners out there, or the ability to get debt to invest back into the business that creates more jobs, it all rolls off the back of it, right?
Yeah.
So we think that businesses are going to be feeling more bullish going forward, are going to be willing to. You think about what percentage of New Zealand businesses are small businesses, where hiring one additional staff member is a huge deal. We think business confidence is going to be far higher. And then the other thing is consumer confidence. You think about your situation. How are you going to be feeling about life if your interest rate is 4.9 instead of 7%?
More cautious now than I was 12 months ago because I had
Nobody
been through
learns a lesson, Reagan. Come on.
now that I've learned my lesson, but I know what you mean. Confidence in terms of, I won't regret going and buying a new pair of shoes because my current shoes have holes in them,
Yeah.
I won't be scared of filling the tank instead of going only halfway. It's those little things that make day-to-day just less comfortable right now. And that was their goal with high OCR, high interest rates. It's removing your confidence.
Yep.
You don't want to spend the money. Not that I want to spend all my money, but it puts you back into a point where you can live comfortably without having to second guess yourself all the time.
Yeah, 100%.
And what's the other thing, coming to point number 4, that happens with interest rates being lower, people feeling better? House prices, they go up. People feel better because, like you said, right? You sold a house, you made $300,000, you feel richer. What happens when you feel richer? You spend some money.
Yeah.
So we think house prices are going to go up next year. What would be your guess, Mike?
Probably 6 or 7%.
I do not call that.
No,
So-
I think 6 or 7% because you've got a range of factors that are now limiting that. Test rates, debt to income ratios. I don't think we're going to see 10% back off to the races.
My prediction, cut this off, Georgia, put a reminder in your calendar. I think it's going to be 10% plus. My concern is multifaceted. One is there are a bunch of people who have been kicking the can down the road that need to move or like want to make a play.
Money burning a hole in their pockets.
Yeah. The other piece is the migration numbers. Granted, they've slowed down, but there's a bunch of people, additional people in the country now. The third one, I don't know if you've spoken to any property developers recently. Bloody hard to be a property developer in this sort of market. We're not building any houses.
Because materials are expensive, labor is expensive.
Yeah, property
Demand's not there.
Demand's not there.
Property developers going bankrupt. Like consents in terms of building houses are very low. So the supply is going to continue to be an issue. Granted, National have some like really good ideas about what they might do, but if we're talking about 2025, none of that's going to eventuate over that period of time.
So for someone who bought a house for $1.42 million in May of 2021,
Yep.
might be me. Do you think prices are going to return to that level?
No, 2027 is probably when you see that.
Yeah.
That's ages away.
Yeah.
2026, 2027 is probably when you see that. Yeah, because prices are still creeping down on average at the moment. We're not through it yet. There's a lag on things in the economy, but you're probably looking 2027, maybe a little bit sooner. I'm sandbagging that a little bit, but that's what I think.
I don't think you're far off because I know, I'm bullish about next year, but you're thinking about it's 20% probably Auckland. Different parts of the country you talk about Queenstown, right? Like it's crazy. What's happened with house price in Queenstown during this market, but Auckland house price is still down 20%. So if you jump, it's the whole saying that if you lose 50% of your money, you have to grow 100% to break even.
So that's why I'm still worried about selling our house if we need to, is because I feel like I'm locking in the loss.
Yeah, but do you think that at a lower interest rate with consumer confidence up, you would still be making the same decision based on expenditure? Because you think that the next round's probably 5 to 7 years of good times. Probably 18 months to 2 years of bad times, which is what we've had. 5 to 7 years of good times, another couple of years. So the pressure to make the decision straight away isn't there anymore. So you may not necessarily need to crystallize that loss. And if you were going to do it, you would almost say that you have financial advice so you can make informed decisions. But if you were going to crystallize the loss, it would be for an opportunity that means your future outcome would be better. So selling one, buying two, renting here, I'm hitting all of the goals at the same time, and I know that's a better outcome, even though I may have lost 20 grand up front.
All I'm conscious of now is making my money work harder for me now.
Yeah.
And that's what I've got to by seeking out good financial advice.
Nice.
The
Point
last
number
reason.
5. What do you reckon? Go on.
Say it.
So I know the WARs. I know they've had a tough 2024, but you know what the
It's been a
great thing?
recession down at Mount Smart.
Yeah. Do you know what the great thing about the new
For
season?
everyone but the people running the parking down there.
Yeah. It's the WARs year next year. We're calling it 2025. We're on.
Yeah, absolutely.
Of the ones.
Yeah.
Cool.
Look, that wraps up another episode of Checks and Balances with Mike and James. Thanks to our wonderful partners at Partners Life. Tune in next week where we're going to talk all things money.
Cheers.
Again, I think. Is that
Yeah.
an outro?
That's all we talk about.
Yeah. Cool.
Cool.
Partners Life is great.